Ladies and gentlemen, I'd like to start by talking a bit about what EN1 is, leveraging an analogy to explain what this extremely technical but maybe confusing tech company does. Additionally, I will discuss the differences between our three business groups and why they're so important, overall vision, and our destination. Essentially, Engage BDR is the core business or largest revenue driver. This is our programmatic ad exchange, similar to a stock exchange, but trades ad inventory instead of shares. Imagine calling your broker to buy shares. That's very similar to advertisers having their marketing agencies place ad buys for them. The broker would use an online trading platform to place your bids for the shares, and eventually the orders get dynamically filled in real time. If the price is too low, it might take longer to be filled. If high, they would fill immediately. This is the same for programmatic advertising, basically auctions. Instead of agencies calling 500 different websites and app owners to execute these buys through placing bids on online trading platforms called demand-side platforms or DSPs or trading desks. The bids for ad inventory are filled in real time depending on how competitive the bids are. Engage BDR is essentially an ASX or stock exchange which connects thousands of publishers to buyers, DSPs, and all of their transactions are automated almost exactly like online trading stock platforms. The global directly addressable market size for programmatic advertising in 2020 is forecasted to be US $98 billion, according to eMarketer. The second business is AdSell, a company which EN1 acquired in 2018. AdSell's business fits symbiotically with Engage BDR, with the Engage BDR programmatic ad exchange, as it's an integrated supplier, providing access to 500 million mobile devices which have AdSell technology directly installed in the SDK, software development kit. AdSell's technology is specifically focused around helping mobile app publishers monetize their traffic or users through providing premium advertisers and campaigns. So essentially, EN1's vision is to acquire publishing partners for the Engage BDR exchange, starting with mobile app suppliers. The integration between the two companies has been incredibly successful to date and was completed within 7 months after acquisition. The third business is Iconic Reach. EN1's in social influencer and paid social business. Iconic Reach's vision is to be the Google AdWords for influencer marketing. Currently, there's a large gap in the industry and large-scale opportunity for Iconic Reach to lead as a technology solution. There are a handful of social influencer marketplaces which have integrated YouTube, Facebook, Instagram, and TikTok. Iconic Reach has integrated all and plans on adding Snapchat next. Even less self-serve marketplaces or influencer marketing exchanges exist. So self-serve marketplaces are a little bit more rare. The global direct addressable market size in 2020 for influencer marketing is forecasted to be US $10 billion according to eMarketer. This is great, but how is this relevant to our other two businesses? There has been little to no integration in the digital marketing landscape between traditional digital advertising, display, native, and video ads with social influencer marketing. EN1 recently developed a strategy and technology in 2019 which integrate all three businesses and provide customers an omni-channel solution. For example, within a single campaign, EN1 can leverage social influencers on Instagram, syndicate the content they create for our brands, for our clients, campaigns across thousands of other influencers on Instagram, YouTube, etc., and then publish advertising to the same influencers' audiences across display, native, video, and audio ads on desktop, mobile, and connected TV, on websites and apps. And EN1 is device agnostic, so it doesn't matter what device we see the user on. There are very few players in the digital ad space anywhere who can achieve this. Once scaled, the ROI for advertisers would be unmatched, and there would be little to no competition for EN1. EN1 has made significant progress in 2018 in materializing the company's vision of being a global leader in the automated digital marketing, programmatic, and influencer marketing arena. The company started 2018 with a goal to fully automate its sales channels, completely divesting its non-programmatic or legacy digital advertising business. EN1 concluded 2018 by achieving this goal and growing its core business by 13% programmatic advertising over the previous year's revenue. Currently, over 99% of EN1's revenue is automated or programmatic. The company has seen significant revenue growth in the second quarter of 2019. Management expects revenue to sustain its current growth trajectory, which would enable delivery of a strong second half of 2019. April average revenues were nearly 200% of Q4 2018 daily revenue averages. That's Australian $21,000 per day versus $41,000 per day, which is a strong indicator for the balance of the year, as revenue is generally at its lowest point in the first half of the year. Management expects revenue to scale to Australian $65,000 per day by the end of this quarter. Additionally, as a result of fully automating its operations, operating expenses were improved by 14% in 2018. Staff requirements dramatically reduced as a result of automation, and costs cut 33% over the previous year. In the first 5 months of 2019, management reduced cash-based operating expenses to about $375,000 per month US, significantly less than the company's expenses in 2018. Management expects the company to achieve monthly EBITDA positive performance imminently. The liabilities improved by about 2 million Australian as at December 31st, 2018, compared to the prior year, as payable write-offs due to ad fraud continue to be an area of high priority for management. And Mr. James Mooney knows about this. Since 31 December 2018, management has significantly improved the liabilities and overall balance sheet position again, potentially multiples of last year's reduction in liabilities. Cash balance at the end of the year was about 320,000 Australian. However, as reported in the company's recent 4C filing, cash balance grew to about 810,000 Australian and continues to grow through the company's operations. EN1 increased available cash through its finance facilities from 7 million Australian at the end of 2018 to Australian 13.5 million available now. The company has now access to capital to sustain operations at a broader scale than previous years and to take advantage of significant growth opportunities immediately. Additionally, management is currently reviewing term sheets for non-equity based debt facilities to initiate immediate payment terms for publishers, which would drive significant new revenue for the company. Total non-cash expenses in 2018 for EN1 were Australian 4.2 million, which is comprised of depreciation, amortization, asset impairment, which is intangible assets, and share-based payments. Thank you sincerely to all of our shareholders and to those who have dedicated their personal time to us over the past few months. Your feedback and correspondences have been invaluable in changing the tone and strategy of shareholder communication, increasing management's accountability and credibility to the market. Management appreciates shareholder support for the company's vision, and we're looking forward to a pivotal 2019 and beyond.